The breaking news coming in on your screen, April retail inflation data is out and it has come in at 3.16%, but also pay attention to food inflation, which has come in at 1.76%. If you talk about expectation, that was in the range of 3.2%, but it has come in much better than the anticipation. In fact, it is also lower than the March data, which was at 3.34%. To discuss inflation numbers, we have with us MPC member Saugata Bhattacharya. Also, we have Sakshi Gupta. Welcome to this special show. First, I want to come to you, Saugata. Do you think the script is behaving as per anticipated lines?
Hi, thank you, Uncle, for having me on your show. It is indeed. I think the markets were expecting the median was 3.2. I was also expecting anywhere between 3 to 3.5%. So, I mean, it's coming very, very close to our expectations. So, it is indeed the script is playing out. And fingers crossed, if the rains actually arrive on time, we are told that it will arrive into Kerala on the 1st. Of June, and if the monsoons are normal, global food prices still remain contained. Even globally, edible oils prices, which has been the sole the food items basket item of concern, even that seems to have stabilized. So, given everything else, I think we will have a fairly moderate trajectory of food and vegetables prices going forward. Of course, core inflation might be a little higher than we had expected, given the improving the trade related scenarios across the world. Commodity prices are beginning to firm up. But even with that, I think the non-foods, the core inflation basket is likely to remain relatively moderate. So yes, I think we are on the path to a durable alignment of, as they say in the monetary policy language, a durable alignment of headline inflation with the target 4%.
So it is towards durable alignment of inflation. Sakshi, I want to understand from you the numbers which are coming in for the benefit of viewers. I'll say once again, April CPI rural inflation is at 2.92%, urban inflation at 3.36%. I'll also once again repeat food inflation, which is coming at 1.78%. Sakshi, how do you read numbers?
Thank you for having me on this show. Clearly, the inflation print today, is extremely positive. It kind of confirms that, inflation in India is starting to kind of show sustained signs of moderation, and we've been seeing this pattern over the last few months. What is more encouraging is that on the food side, there seems to be a broad-based moderation, which is not concentrated just in things like vegetables and fruits, but also cereals and pulses, which tend to be a little bit more stickier. There we are also seeing a moderation in inflation. I think with the expectation that monsoons are going to be normal or above normal this year, and you're coming on the back of good food supply from healthy outputs from FY25, I think the outlook on inflation definitely has turned much more favorable now. We are tracking inflation to be, close to this 3.2% print over the next 2 months as well. On the global front, again, both food and non-food, prices have broadly either been inching down or have remained stable. So that's another positive for the outlook on inflation. I think this print does set the stage for continuous monetary accommodation from the Reserve Bank of India going forward.
Definitely it does, but Saugata, I want to understand your view on the same, because the expectation of Reserve Bank of India is that later half of the year there might be some pressure on the inflation side. Now these numbers, especially last 2 months, have come in better than the anticipation or expectation which was there even in the market. How do you see panning out of inflation in the light of these numbers? Do you think that even Reserve Bank of India may outperform in the target which they have given?
So you mean the inflation forecast?
Yes, inflation forecast. Do you think there is a chance that overall inflation number may be well below 4.5%?
Yeah, it a possibility, definitely. But I mean, given the still prevailing levels of uncertainty in the system, it's best not to second guess the forecast at this point in time. It could very well be less than the 4% inflation forecast. But there are so many moving parts in the current environment that, and as you say, in the second half of FY26, particularly in the fourth quarter, inflation was actually forecast to rise a little bit after coming down gradually towards the 4% target. So it's actually forecast to rise a little bit in the fourth quarter. So there are too many moving parts of this. There is still an elevated level of uncertainty. So let's wait and watch. But I'm very hopeful, very sanguine that the inflation trajectory, the direction of travel of the path is definitely downwards, especially in the near term. And hence, there is continuing scope for monetary policy easing going forward.
Right. Sakshi, I want to understand from you, already expectation was there of a rate cut which can happen later part of the year. With these numbers, do you think that call grows even louder?
Well, my expectation has been that the Reserve Bank is likely to use this opportunity where you are seeing continuous uncertainties around growth because of global headwinds while inflation is coming down. So they might use the opportunity in the near term and deliver another rate cut in the June policy itself. I think beyond that, I think as Saugata highlighted, there are a lot of uncertainties. How the monsoon is going to perform. What is going to happen in the second half of the year. We are still uncertain on the tariff bit and what sort of spillover effects that can have. So in the second half of the year, while I still do believe that there will be space for further monetary accommodation, I think that we'll have to kind of see how some of these uncertainties play out to comment on the extent of rate cuts beyond June. So my call right now is for another rate cut in June and the possibility of further rate cuts in the second half.
Saugata, once the inflation worry is over, I'm not saying it is over, considering we are in a scenario where there are too many factors which are out of our control, especially the geopolitical scenario. But now it is a clear-cut path for Reserve Bank of India to focus more on growth. It was already emphasized by Reserve Bank of India governor last time.
Yes, you're right. I mean, if you read his statement, heard his post-policy interactions, etc. So, I mean, the focus is definitely now on supporting growth. And to my mind, also, given the high-frequency indicators that we track during the course of the results that have come in the final quarter of the Q4 of FY25, that the growth inflation balance is definitely tinted against inflation, more towards supporting growth. I think there is a slowdown, although the high frequency indicators still suggest that we are likely to grow anywhere even in FY26, upwards of 6.2, which is where my current forecast is picked at. But that also depends on how the global environment, trade in particular, plays out. But as of this point in time, between the growth and inflation, the two competing targets, I think the focus should probably now be more on supporting growth than on the need for controlling inflation. I think inflation will remain relatively moderate. Even if it goes above 4%, it will not be very significant crossover of the 4% target. And over a long period of time, I think we can expect that inflation will, depending on everything else, ceteris paribus, as they say, given everything else, that inflation will probably be close to the target, which is the MPC's the primary objective and goal. And there is now scope, not just for monetary policy, for various other policy handles, fiscal policy, trade policy, manufacturing policy, etc., to ensure that growth goes up to its unclear, but higher than what we are growing in now, our level of potential growth.
Sakshi, if you talk about internals of CPI inflation this time, particularly food inflation, is it now comforting or you think there is a risk which still remains?
Look, as I said earlier, vegetable prices can be very, very volatile, right? So if you see some sort of disruptions on the weather front in the coming months, then vegetable prices tend to be very, very volatile. But I think I agree that there are signs that are more encouraging on the food side, that are coming from cereal and pulses prices now sustainably coming down month on month and also year on year, right? So that had been a problem over the last 1.5 years, and the durable decline in inflation that we are seeing on that front, I think, seems to be very, very encouraging, and at this stage. And that is why I believe that going forward as well, our outlook on inflation is much more optimistic than where we were at the beginning of this year.
Saugata, you also mentioned about the core inflation. How do you view core inflation panning out in the coming quarters?
I presume that's for Sakshi.
Yes, Sakshi, we were discussing about the core inflation number which was mentioned, but Saugata, I want your view as well. You mentioned about core inflation numbers. Now, with the kind of trajectory we are seeing, that is still higher. How do you see this panning out in this fiscal year per se?
So core inflation, there will be a few factors that will add to core inflation. One, of course, is the prices of fuel. So the imposition of various excise duties, etc. So I mean that will probably get added to. On the fuel, on the crude prices, I'm quite confident that crude prices will remain moderate. I'm not going to give a level. It'll go up and down around about the 60, 65 levels, maybe a little lower, given the OPEC plus cuts. So that also opens up multiple options for the government in terms of augmenting fiscal resources via excise duties, etc., without adding undue pressure on the various the downstream items of petro products, etc. So on that front, we are likely to remain relatively comfortable. Metals prices, the other thing that impacts India. I think the various factors that we have seen, if trade deals and tariffs, etc., begin to normalize, that will begin to push up expectations of growth. That will take the metals complexes higher. But given the generally soft expectations of global growth, they are not likely to go up very significantly. They will certainly go up beyond what the levels that we are seeing now, but not, to my mind, very significantly. So these two together, and if the system begins to normalize, gold prices are likely to retrace back. So which is a component of core inflation. So even that might begin to ease off. Logistics will be another factor which might have actually added to input costs globally and locally, domestically. Even that might come down. So given all these factors, largely we might expect that even core inflation, although it might be higher than 4%, but core inflation is also likely to remain.
Right. Sakshi, I was not looking for levels from Mr. Saugata Gupta, but for you, Sakshi, I want to understand that how do you pencil in terms of numbers core inflation? Do you think this will remain higher?
So look, what has been happening on the core inflation front is that you've started seeing core inflation inch up towards 4%, right? A part of this increase that is happening in core is because of very, very low base, right? Because if you remember, over the last 12 to 18 months, core inflation had been, between 3 and 4%. And now, as we go into FY26, that low base is going to push up your YoY number on core. Right. So because of which we are anticipating core inflation to average, somewhere between 4.5% for FY26. This is, of course, premised on a couple of things. One, as Saugata pointed out, the input cost and commodity price pressure is going to remain relatively well managed. Secondly, I think that, while you are going to see some improvement in domestic demand, we are uncertain as to how much of that is going to make producers comfortable in passing on, any sort of price increases that they might face due to tariffs or due to other issues, right? So at this stage, while core inflation optically is looking a little higher than where we were last year, I don't see that as a big worry. I think it will broadly remain between this 4.5% range, and that kind of along with food inflation now inching lower, means that your headline inflation remains close to target, or in fact averages below the target, which is 4% for FY26.
So, Agatha, I want to understand from you, till now, inflation was acting as a villain, especially food inflation. But for now, we have seen month after month that problem seems to be behind us, at least for now. Which are the factors you think in coming months can play a similar low role? I mean, which can be the villains according to you?
Well, the constraint, I mean, this is nothing to do with MPC, because I mean, that is not within the domain of the MPC. But obviously, I mean, monetary policy has to keep an eye out for the external balance, the external developments, including the movement, the path of the currency. But even there, I think we are relatively okay, because I think the way things are playing out, you've seen a movement up, some strengthening in the US dollar index, the DXY as it's called. That has gone up from sub 100 up to 102, and there is the potential that it can actually go up a little bit more. I mean, given the relative trajectories of rate cuts of both the Fed and the European Central Bank and the Bank of England. So that remains a little bit on the. We have to keep an eye out for where the currency is headed. I think we are fairly comfortable on that front as well. Our forex reserves are very high, are improving by the day. You just heard that there might be inflows coming in from portfolio inflows that will resume at some point in time. So given all of this, so that remains okay. Transmission is actually moving better than what we had expected. RBI's liquidity measures have created room for the policy rate cuts to be transmitted to lending rates. So even that is happening. So I think these are the other factors that we need to keep an eye out, and which might actually become a bit of a problem in the trajectory of rate cuts going downwards. But I think as of now, given current conditions and expectations of evolving conditions, I think we are okay on that front as well.
Right. If I ask you, Sakshi, about the forecast which you are making, particularly on inflation front, now with these months number out, how do you see FY26 CPI now?
At the beginning of this month, we had already revised down our headline inflation print earlier from 4% to 3.7% average. This was based on the fact that, the April, May, and June print for inflation will be considerably, lower, between, as I said, 3 to 3.2. So on average, we are looking at inflation at 3.7. For the next few months, I think between 3.5, and then in the fourth quarter, we do see, because of base effects, inflation inching above 4%. But even after taking that into account, we are fairly positive on our inflation forecast for the year as well.
So, Agatha, one final word I want to take from you regarding the geopolitical condition which is happening now. Of course, last week was something which was completely something nobody could have even anticipated. Similarly, tariff situation is not out of woods still. There are still talks which are going on. India has today written to WTO. How do you think this situation will pan out, and will it have some kind of adverse effect on our growth situation as well as inflation front as well?
So, I mean, you're completely right that, I mean, there's so many uncertainties, and particularly what happened last week was such a tail event that it was difficult to predict going forward. Things can happen. I mean, the black swan events, this is probably one of them. But there are many known unknowns at this point in time, how these play out globally, and the risks are largely global. So, and the tariff issue and global trade, supply chains, etc., that's the biggest source of concern. So the bottom line in all of this is that there is some level of stability, some level of equilibrium at whatever level, might be at a low level, mid level, or high level equilibrium. Whatever happens, any policy, and particularly monetary policy, which deals with the external environment, which is the closest link to the external environment, has to tread gradually and cautiously. This is a mantra that you are hearing from all global central banks. I mean, uniformly, I mean, you are beginning to hear from this across central banks. And I think that will be the deciding factor in going forward. I think there is space for further policy easing. But again, I mean, these actions need to be taken on a meeting by meeting basis, cannot be predicted in advance. There is room for policy, but it has to be gradual and cautious. Very careful in assessing the impacts of the policy decisions.
All right, thank you so much, Saugata and Sakshi, for joining at this hour in this special discussion.